Great. Hello, Finimizers. Welcome to another Finimize Live. My name is Theodora, and I'm your Finimize analyst hosting today's event on the ESG revolution, investing with purpose, with our partner, Fennel. But first, we have some housekeeping to run through. As you're entering, please fill out the poll in front of you quickly. Feel free to introduce yourself in the chat, tell us where you're tuning in from, and remember to switch to all attendees so everyone can see your messages. This will be a 15 to 20 minute conversation followed by 10 to 15 minutes of audience Q&A. You can use the Q&A box down below your screen to ask a question. And if you see a question you like, make sure to upvote it so we can get through the most upvoted questions. Okay, so let's kick this off. Our event partner for today is Fennel, the investing app that puts the power of conscious investing in your hands. Want to know a company's carbon footprint, the gender breakdown of a company's board of directors? Does a company have a policy on child labor, or has it been recently in the news for overpaying its executives? Fennel is a mobile investing app that gives you the power to create change through your investments. Using the Fennel app, you have the ability to trade US listed stocks and ETFs, and you have access to comprehensive financial data that can help you make well-informed investment decisions to better manage your portfolio. In addition, Fennel connects retail investors to information about past and upcoming shareholder votes in order to show how you can play a part in guiding the decisions of companies that you invest in. So enough from me. Today, I'm very excited to have Daniel Naim, founder of Fennel, for a deep dive into ESG and how to use your shareholder power for positive change. It's so good to have you with us here today, Daniel. How are you doing?
Great. So it's so good to be here. Thank you, Theodora.
Fantastic. I believe that we all had to fill in a poll at the start of the session. So let's see those results. Oh, great. Wow, fantastic. So first question, how important is investing sustainably to you? We've got almost 100% of participants here saying that it's somewhat important, very important. And majority of people, actually slightly below half of us here, have made some ESG or sustainable investments. The remaining 50 plus or so percentage have not yet been, but are looking into it. So I guess today's webinar, today's topic is going to be very helpful for lots. Without further ado, let me dive into our first question. The world of ESG investing is very complicated. You know, many terms have been thrown around, bandied around, but curious to get your thoughts, Daniel, kind of what do you think is sustainable investing, and how and where does ESG fit into it?
Yeah, first of all, I really love those poll results. It's not that shocking to me. It's really interesting to see how much people are actually interested in this space. Whoever that 1% is that, said no, I really hope by the end of this, you can reconsider. But again, it's really no shock to me that people are starting to take attention around ESG. It's starting to become more of a mainstream news topic to talk about, and really no surprise. I mean, Biden's first veto was rejecting a Republican proposal to prevent pension fund managers from basing investment decisions on factors like climate change, as well as like $2.5 trillion have gone into ESG investing by the end of 2022, and it's not looking like it's slowing down. What's really interesting to me, though, is that ESG has kind of moved from this exclusionary approach. So in the past, it's been more focused on divestment. So some examples include things like the divestment from Dow Chemical during the Vietnamese War. They produced Agent Orange, also pulling out of companies that did business in South Africa during apartheid, and even nuns investing their pensions according to their values. So, no abortifacients, no alcohol, no tobacco. But in recent years, it's starting to shift into something that's a little bit more complex, and it's transitioning from values to value. So there's a real opportunity here from an investment perspective. And when you really start to fundamentally think about investing in a business, you need to start to understand the time horizon and what can happen within that time horizon. The world is changing quite rapidly these days. I don't think I have to speak out about what's happening in New York. Unfortunately, that's not the only place events like this are happening. Climate change is really starting to affect the planet. Social issues are starting to crop up more within these large companies. They're speaking out, and younger generations are starting to make purchasing decisions based on, the social responsibility and the sustainability of the company. And so as an investor, you really have to start to think about these, ever-changing dynamics as risks. And ESG is a great, framework to think about risk, especially when I'm trying to invest in the future. What kind of future am I investing in? And so while I think fundamentals might be telling you a great story of where the company is now and where it might be headed in the, short-term future, ESG has the potential of telling you how they're positioning themselves for the future. Now, I think ESG is still in its infancy and it's still ironing out its kinks. And I think probably the most infamous, thing that points to this is the ESG scores differing, right? The discrepancies and the limitations between the scores. Just because the scores differ, it really doesn't mean that that's a bad thing. If you look at the credit rating industry, a majority of the firms all conformed to a single method that posed a massive risk to creditworthiness during the 2008 collapse. And companies might start to game the system now with ESG if it's all under the same framework. You're already seeing some creditworthiness is starting to pop up around ESG preparedness, and companies might have skewed incentives in strengthening their business versus strengthening their approach to receive these funds. Essentially, just a different way of lobbying. You could have people that might be have the dollars to invest into ESG more than smaller companies. So, the point of these scores is not really to show you the world in a single view. It's to expand and broaden your investment approach. Everyone on here knows that investing is not easy. And if people tell you it is, they're really not giving you the full picture. The same is true with the scores. I'd like people to think about the scores as an entry point, because there's a lot of traps you can fall into if you just think about the score as a holistic approach. One, very common example was in the news last year. Elon Musk was talking about why is Tesla, ranked lower than ExxonMobil. There's some nuances here you need to know. So the full ESG score doesn't just consider sustainability, it considers social aspects of the company, governance aspects of the company. That's why they're all, equally important, and they need to be separated out. And so again, look at the scores as a guiding path, right? But as an investor, you need to do your due diligence and look one layer further. So you need to look at the significance of the individual metrics within the ESG score. So, as we were saying, things like what is the pay gap between men and women? What is the carbon emission, et cetera? And it really can tell you something about, how is the company positioning itself within its industry? Because, two key things to understand here is not every business has infinite amount of money to supply to invest into its ESG practices. It has to be very smart about, are the things we're investing in material to our industry, right? So if I'm in the energy sector, am I doing the right thing by investing more into renewables, reducing my carbon emission per oil barrel? And as an investor, you need to look at those items and think, okay, is that helping, is that going to help their business in the long term? And make sure that it aligns with your given hypothesis. And so what we really try to do at Fennel is encourage people to look at the second layer, to really look at the underlying data as well.
Great, thanks, Daniel. That was a very comprehensive reply. I just wanted to pick a little bit your brains when, you mentioned about how, ESG is seen as a great framework to think about risk. And I guess as investors, we want to do our part. We want to invest in sustainable companies, but yet we're also concerned for our returns. So again, against this backdrop, for people who want to invest according to their values, is there a need to sacrifice returns? And also if, what are your tips and tricks to find the most kind of sustainable companies without having to sacrifice returns?
Yeah, so the first thing I want to say here is that ESG investing is not a switch, right? So you really should think about it as a dial that you can turn across different lenses and perspectives. So there's this preconceived notion that investing according to your values must mean sacrificing returns. Actually, it depends on which lens you're looking through. So ESG has hundreds of metrics to look through. And recently, Bain and EcoVadis did a study around a lot of these, different metrics, and they found a strong link of ESG performance to strong business performance. And so let's just take a couple examples of these lenses. The first one that popped up to them the most was that they looked at companies within the S&P 500 over the past 10 years and found that female CEOs outperform their male counterparts over those 10 past years. That could be an interesting one that could align to your values. It fits under the ESG umbrella. There's a tie to performance or from their study is what they're saying. Another key thing to think about here is that you can be on two sides of the equation. So let's talk about, the Ukraine crisis that happened. Oil prices shot up. Oil companies outperformed in 2022, but companies that had high exposure to oil had their profit margins eaten more than their competitors. So this is not, the energy companies themselves, but these are that are buying the products from them. So again, it depends on your horizon and it depends on which side of your equation. So you can use ESG, you have to use it as a versatile tool there. And of course, this may be a chicken and egg scenario where strong businesses can invest in their ESG performance, but regardless, it shows that ESG and financial returns aren't opposed to each other, and oftentimes they're linked. And so you might want to think, okay, if there's a carbon tax coming down the future, maybe this company is performing well now, but if I'm investing for the long term, are they going to be hit with this risk? If I'm investing in real estate REITs in Miami, where there's rising sea levels, am I at risk? Now, there's other instances in which there's been ESG metrics that actually have no correlation to returns, and they could be ethical, your own personal investment philosophy. So like DEI stands out. There was a study done in London Business School in Columbia that actually showed there was no link to future stock returns here. So you might get curious, you might start to look, does that apply to every industry? Can I start to create my own hypothesis here and start to see these data correlations and make informed investment choice? And so I really want to encourage people to get comfortable with that data and explore it, because it's not just one-sided. It's not just about a single ESG score. It's really looking at the underlying metrics. And for so long, retail investors have been have gained access to limited data sets, price to earnings, et cetera. This really offers a new way to, do independent research and try to find correlations that other people in the market have not yet found.
Great, thanks. Yeah, I think what you said is very helpful, because a lot of times we're just relying on a final score, like, oh, this company scores well, great, let's invest in it. Whereas actually there is a lot of depth in the kind of different ESG metrics, and different ESG metrics can have a different weight or importance for different companies in different sectors, like you mentioned.
Yep.
So beyond those ESG scores and data that you're talking about, what other tools are there in a retail investor's toolkit that you think is equally important?
Yeah, so I think stewardship is another important tool for ESG investors, because, piggybacking a little bit off the previous question, the way to make an impact is not just to divest or to align yourself with ESG centered companies. You could invest in companies that are brown companies or not doing very well, and change them from the inside or influence them to try. So invest in what you want to invest to make whatever profit you think, but push them towards more sustainable practices. And so stewardship really consists of two major components: engagement, which is mainly relevant for large institutional investors and asset owners, where they engage directly with the company, or proxy voting. And the nice thing about proxy voting is it's open to everyone. It's truly a democratic process for companies whose votes, are one share, one vote. And so I work at a startup, and building a relationship with my investors, my customers, my employees, it's really beneficial for me and the company as a whole. It starts to become harder when you're a large public company. Maybe you can tweet at them, but who's to say that they're really listening? Unless it's Twitter itself that seems to be working these days. But shareholder voting is one way. And so companies host their annual meetings, their AGMs, once a year to really talk about the important issues facing that company. And these proposals don't just like happen over 1 to 2 weeks. It's years of engagement with the company. And now as a shareholder, you're presented with this information to really weigh in on this important and material issue to the company. And so I think, activism and voting and getting engaged with these public companies is really important as a retail investor. There's been countless incidences in which over the past few years, these campaigns have launched and had material impact on companies. I think the largest and most notable example is engine number one was this small hedge fund. They invested about $10 to $12 million into ExxonMobil and acquired 3 of the board seats there with the sole intent of reducing carbon emission. And that's been their sole focus over the past couple of years, putting out reports, trying to steer the company towards more renewable. And they didn't do it out of the love of their hippy-dippy heart. They did it because they looked at competitors like Shell that were investing in the renewable life cycle of energy far earlier on, 15 years before, and they knew that that company was better positioned for what the future looked like of renewables. And they wanted to convince, this other large energy company to do the same. So the problem here is, though, that a lot of these votes that, the system is quite antiquated, and the way that retail investors engage is incredibly difficult. Institutional investors have all these tools like voting policies, analysts, easy ways to digest this. So what we do at Fennel is we show you the votes up front. It's not a 50-page, 10-point font document that you have to read through the whole thing to understand what's happening. We put the reports in front of you, the polls in front of you, the information in front of you, so that you can get engaged more easily. And it's really our ethos here. We think that we can create a community that really does care about these votes, that really does, show up at the boardroom and put the retail investor's voice closer to the boardroom.
Great, super helpful. We've come to our final question from me, and then we're going to move on to Q&A. There are quite a few exciting questions in the Q&A box already. So to the rest of you, if you've got more questions for Daniel, please shoot it in the Q&A box. A final question for me is, for those who are just starting out on their sustainable investment journeys, what advice would you give them?
Yeah, so I'll keep this, quick so we can get to the questions, but really be curious, ask questions, and leverage the data. Okay, so I think get comfortable with looking at this data. You spend your everyday life thinking, okay, I'm going to make an investment based on the products that I use. But you're workers at these large companies. You live in the environment that's changing. You know the issues that are probably most important to a company in your day-to-day life. And so, broaden your investment lens to start to think beyond just, price to earnings, et cetera. Get comfortable with the data. And I really would encourage you to look at the votes within a company. It can give you a sense, the data can tell you what the company is doing now, but how the board is approaching votes and what they're doing in the shareholder voting space can tell you where they're trying to take the company, whether that's, aligned with you or not. And last point is just think about ESG as a framework. There's a lot of tools in that kit. There's risk you can associate with yourself. There's a lot of things you can do.
Super. I think it's what you said is very wise. If we're truly interested in making an impact, we shouldn't skim on investing more time to understand some of these metrics like ESG metrics and what impacts the companies we're investing in. Okay, so now time for Q&A. We've got a top question here from Alexander. And Alexander's question is asking if you're worried, whether you're worried that this rise in ESG assets under management is largely driven by a misclassification of assets. Is greenwashing in, the sustainable industry a concern for you at Fennel? And how do you guys at Fennel tackle this?
Yeah. Hey, Alex, thanks for the question. I think it's a major problem within the industry. Okay. I think we've thought a lot about it at Fennel. We don't just give you the independent scores for a company. We show you aggregated results for ETFs across your portfolio. So if someone is trying to convince you something is a green ETF, we're showing you all the way to the bottom level of this is the average carbon emission of companies within this fund or this ETF relative to an index. The other aspect that I really think is the most important is government has to step in. So we know that recently there's this hopefully very soon passed law in the SEC, Carbon Disclosure Act, right? So they're trying to get public companies to essentially commit to accurately reflecting what their carbon emission. I think this has to be the case through and through. Government has to step in, has to clean up the space from a disclosure act. I think if you look at the shareholder votes, a lot of them are focused on disclosure, right? They're focused on, hey, can you report on your forced labor practices, pay gap between men and women? A lot of these votes are just asking for more transparency with the company. I think that's very important. That's why there has to be more engagement. And yeah, the investor has to really be diligent. But until, big government can kind of step in and set the boundaries, at least for what is greenwashing and not, you have to be cautious of that. And then make sure that the data that you're looking at is good quality so that they're taken from SEC filings, or that it's coming from a legitimate source.
Fantastic. The next question is from Tanya, and Tanya is curious on where you would recommend looking for ESG-focused companies or funds.
My biased answer is always come to Fennel and check it out and start exploring those tools. But again, I think reading the news is a great way to understand the initiatives that these public companies, what they're doing in the ESG space. A lot of large news agencies like Bloomberg, et cetera, have, very hyper-focused topics in this space that you can follow specific reporters to that you like that talk about these issues quite often. Other examples could just be attending Finimize's conferences, of course, but companies will nowadays have more emphasis on how they communicate ESG to their investors. So they'll have specific pages on their websites that are just focused on communicating their sustainability practices. More companies are hiring, these people. But again, I love this question because I really do think it's a problem. There is no solution right now for retail investors to gain access to this data, to find these funds and to find these companies easily, which is what we're trying to address.
Great. Then there is another question from Dina. I think Dina is asking from the point of a more kind of passive investor. How does ESG impact ETFs as you're a passive investor? How do you think about ESG?
Yeah, so like I said, the fund, a lot of funds are doing very interesting things in this space. To Alex's original point too, you have to be cautious of greenwashing. You have to look at underlying, what they're doing from an underlying perspective. So everything I said about data applies to the ETFs. Look at them holistically. But what's very interesting about ETFs as well is there's this concept of pass-through voting. So if you look at all, large public companies, a majority of them in the S&P 500, the top 3 owners are Vanguard, State Street, and BlackRock. And they own, a large portion of those companies, and they have a large voting right within those companies, so they can direct them kind of what to do. Because people invest in their ETFs. They create these low expense ratio ETFs. People invest in them. They essentially give up their right to vote to these large companies, and they can influence. So if you're going to invest in ETFs, an interesting phenomena that's coming up, hopefully over the next couple of years, is this idea of pass-through voting. So being able to, tell these ETF fund managers how you want your vote to occur.
Great, thanks, Daniel.
Yeah.
I'm starting to see kind of a lot of questions kind of asking about, how do I find ESG stats for companies in a condensed format that's easy to digest, by Zara, and another one from Tanya again. No, sorry, not Tanya. I think, Fortune asking, how do I measure ESG to get an accurate number? I think Fennel does a lot of this. Do you want to spend a minute or two just to share what Fennel actually does? Because I think that would really help answer those questions.
Yeah, so Fennel itself is a licensed broker dealer. So just to be clear, you can go on the platform, buy the stocks directly on the platform. You can also use it, for this data. We have countless ways to explore different, not just sectors, sub-industry, rank things by ESG scores, rank them by performance, try to match things up and dive deep. When you go to a company on our application, you can also, there's 10 ESG themes that we've laid out across, carbon emissions, social issues like lobbying, spending, all that stuff, and governance. Do they have truly independent board members, et cetera? You can click on any one of these 10 ESG themes, and we have countless metrics underneath each one of them. So things like pay gap between men and women, percentage of women employees, for example, carbon emission, waste dumped, water recycled, energy recycled. All we have, close to 200 of these metrics, and we're adding more consistently and easier ways to navigate this as we get feedback from the customers. So that's one way. We also break down, I think it's really important to understand board, executives, and employees. So what's the pay gap between the CEO and the average employee, who the board members are, which other boards they serve on. Hey, did you know that the former Speaker of the House for Republican sat on the board of Fox News during the, last presidency? All of these things you can start to put together on the Fennel app.
Great, thanks for that. Another question here from Alex. Alex is asking if you think exclusion as a strategy is a viable investment when you're building your ESG portfolio, or does it not drive the right impact?
It really depends. So I love this question because one frame, it's hotly debated in the industry, but you could say, okay, if I divest, it drives the stock price further down and it just leaves the gap for someone else to come buy it cheap because they don't care about these ESG impacts. Is the company really feeling the pressure from that divestment? And so, there's a correlation here, or there's like a link you can put between what's the ethical way of short selling a company. Is it just, divesting or shorting the company? And maybe there's a fun debate there. But I think if you want to be impactful in a public company, impact is a very specific word outside of ESG, but for this purpose, I would encourage you to keep the company's share and engage with them. So vote on the proposals. Even eventually you can put your own votes forward if you have, $15,000, $25,000 invested within this company.
Great. We've got a question from Alejandra. Alejandra's his question is, I understand Fennel is only available on the US. Are there any plans to reach LATAM or Europe in the near future?
So, can't give away too much. We've been receiving that quite a bit over the past few weeks that we've made our public launch. So we're actually looking at ways of doing this right now. So stay tuned. We hope very soon that's going to be a, good possibility for everyone. Whether or not we can offer, likely it's not going to be offering the ability to actually buy and sell securities, but this data we think is important to people, and we think expanding it is worthwhile.
Great. Potentially one last question here from Anton. It's quite a lengthy question. He's asking about green bonds. They've been around for a while. Social bonds have also been on the rise lately, but he hasn't heard a lot about governance bonds. Do you think that will be more common, and what could a bond like that look like?
Yeah, I don't know too much about the bond space. I will say I'm I'm fairly familiar with green bonds and social bonds. I just spitballing here. I don't think a governance bond really makes sense because the point of these bonds is to have material impact. It's to invest in a community to make them better. And you're hoping that there's an economic return from that bond. So you invest in a, rough, neighborhood or something like that. Similarly, from sustainability, you're investing in like a renewable project and you're reaping the rewards there. Governance would, I think that just be like investing. So investing in a company that you think treats their board and shareholders correctly.
Fantastic. Thank you, Daniel. I'm afraid that's all the time we have for today. There are still lots of questions, in the chat box that's unanswered. But before I wrap up, Daniel, is there a way for people to find out more or get in touch with you after this webinar?
Yeah, so website is a great place to get started. Download the app as well. We're coming up with a free trial very soon. I'm always open to conversations. Please find me on LinkedIn. It's just Daniel Naim. We also have an Instagram page where we communicate, quite often, Fennel app, and just follow us and find out more, and please reach out.
Great. Thank you for joining us today, Daniel, and I hope this has been enlightening for all you Finimizers out there. See you all at the next event. Enjoy your day. Goodbye.
Thank you, everyone. Thanks.